Everybody, welcome to Stockradar Stocks on the Move for another week. Today's day is the 31st of August 2023. My name is Richard Lee and I manage the stockradar.com.au website for you. Okay, today we're going to talk about the trade plan or the roadmap, which helps guide us in our shark-infested waters of the stock market. Let's get to our top 10 trend intensity rankings straight away. Firstly, AE's gone straight to the top with a big new high last week. Breville Group's broken up. There's a couple of little smattering there of industrial material stocks, internet stocks, even the property stocks, GMG, which again, it's just been the pick of the bunch in that property group. A lot of them have been floundering quite badly, but GMD has been kicking it on quite nicely. So that's one we've followed and we've done pretty well on. Okay, talking about trading tactics this week, I'm going to talk a bit about the trade plan, why it's so important. It answers the questions that you have, and we'll talk a little bit about how it helps you keep you in control and manage your emotions a bit later on. So that's the trade plan. We'll talk briefly about that in trading tactics, but for now, let's get straight to the markets. And the Dow Jones Industrial Average, well, it's held the support this week. It's come back down to this little area. We're looking for a bit of support through here, quite a few peaks through here, and we've got this big high up here. So we've got buyers and sellers happening here. It really is a tussle going on here. So we just have to be patient and wait for the direction. But for the moment, it is up, and I guess that's a good thing. But we really need to break through here to really get some more substantive moves ahead of us with a bit more confidence. The S&P 500 again looking pretty good. Good recovery this week. You know, we had some reasonable selling there last week, but we've had some good recovery this week, and I think that's probably not a bad sign, and we are in the scheme of things on an uptrend, and we have been since last October. So we've just got this little high we need to worry about at the moment. Nasdaq's slightly further off the high, but still the same sort of picture. We've got a good trend. We've had a nice little pullback, so we had a reasonable bit of selling, which is not a bad thing, because if the market holds up and the buyers come back in, we'd like to see that, because that sort of reinforces the trend of what we're looking for. Okay, so now we go to commodities. Copper again is still in a downtrend, struggling all the time. It keeps making rally attempts which are lower each time, and it's making another one now, but we saw a good sell-off last week and some good volume. So the trend is still down there on copper. Gold has been teasing us for, well, since about March this year, just rotating around below 2,000 and not really giving us any further direction at the moment there. So gold's just holding up there for the moment. Brent crude again, it's down, but it's in the turning trend phase. Okay, so as we look at this here, this pattern down here, we've got the downtrend down here, we've got a nice little low across here, which has been very positive, tested a few times, then we get some good volume to push the market up, and the market has a good rally, then the sellers come in, and then they knock it on the head, and this is why I call this a battleground, because the buyers have been winning, then the sellers come in, and it's a bit of a tussle between buyers down here and sellers up there, and we're waiting for resolution, and this is normally a precursor to a trend reversal. As this sort of phase happens, no new low occurs, it battles around above those lows, and eventually the sellers will pack up and go home, and it'll pave the way for the buyers to move on. That's roughly how the trend and moving into that consolidation phase works, and that's what the buyers and sellers are doing, jockeying around. So that's the commodities. Oil's the one that's probably looking a little bit better than the other two at the moment. We go to our market, the S&P, ASX 200. Again, we're still sort of rotating around 7,000 more than anything, and you can see back here in February 2020 we were roughly at the same level we are now. So it really has been a tough period to try and to make some money through here. But we just preserve our capital, and the time will come when we can make some good money. We'll just be patient for it and wait for a resolution to this endless trading range that seems to be occurring on the ASX 200. If we quickly go and have a look at the stock big count, okay, it's down 2 to 43 of 184, so we've got 34 stocks of 161, 9 ETFs of 23, so 34 stocks. Not a lot in the scheme of things as far as breadth goes, but plenty of stocks there to pick a few winners from. The portfolio hasn't really changed much this week. I'm going to be talking a bit more about the conservative portfolio and some changes I'm making to that shortly. But for the moment, it's 5 out of 20, 25% equity is not so bad there. The other ones I will pick one up, 4 out of 5 for the Energizer 5, 6 out of 10 for the Energizer 10. That should be 60% equities, 40% cash there. And the other two energizers are 4 out of 5 at 80% equities there. So we picked up a stock there. Still not totally confident, otherwise they'd all be full, but that's where they are at the moment. So that's the portfolio update for the market at this stage. So now let's get into a few stocks. Okay, so we've got some of these sector themes going on. Industrial materials, some of the energy Goliaths are moving, some of the insurance travel stocks are going on, and some of the communication stocks as well, which I'll talk about later on, which is my grouping together of the internet and the telecom sectors, and I'll do that for next week. But for the moment, we're going to go through and have look at a couple of leaders. Outside those sort of sector sort of themes which are moving quite well. Firstly, we've got Brambles, which is, we saw a great report this week. And we've been holding this one for a while. It made a new high. It didn't go on well. It kicked back and fell back to the support here, and it's gone up again to the high, and it's just jiggled around frustratingly for a couple of weeks. But here we are. We've got a good report. And this is a pretty good sign here because, again, we've got this big top here at Brambles, which we've been looking at for a long time. It's a big resistance level. So this is a significant move for me, a new high like this. And certainly the market's behaving like it is. And that's been a big jump this week, so I'm not too sure what's happened today. But Brambles looks fine. The average has been okay. Momentum's been okay. Although it's slowed a bit through this trend here, it remained positive. And demand has remained positive. But again, we're looking for this to kick up a little bit now that the market has started to recover. So trend intensity ratings for 8 for Brambles, and it's been doing pretty well indeed this week. Coles was one worth looking at. Suffered a bad one. This is the roller coaster of the reporting season. If we see the ups and we see the downs, and it really is hopefully in the right way. We were in the right way with Brambles. We were in the right way with Coles. So we're lucky on both those fronts at this stage. But Coles has come back down now, as you can see. Trend intensity's dropped to -6. It's come right back to its big support area that's held it up for most of its trading life. Okay, so this is not trading life, so since about 2020. But it's been a pretty good range there, so we'll have to see if this holds here. It may be a good opportunity, which is to get some sort of evidence of some buying here, by a bit of volume maybe appearing and a bit of a stalling of the price. But that's what Coles looks like at the moment. Back to the low of the trading range, looking for a buying opportunity possibly. Okay, so that's Coles. That's a couple of leaders I want to have a look at. Trend reversals or opportunities is probably from a couple of stocks I'm going to go through today, both in the same sort of area. Now this one here is ArbCorp, which we've looked at a couple of times before, but we've seen this big trend down here. Support is held down here 3 times. It rallied and tried to get through here and couldn't get through here. It's come back down. It's formed a higher low. So we're getting this sort of construction of a support base behind here. And now we're seeing a reasonable bit of volume here. On this rise at the moment. It's now starting to break through this area here, this trend reversal here. Trend intensity rating is +1, so it hasn't broken through, so we'll look at that next week as to what it looks like. But got a bit of volume here, momentum's turning positive, it's above the average, so the signs are looking pretty good. And we've also had a 50% correction in the share price over the last couple of years, which has brought it right back from 53, 54, right back down to 24. So that's been a big correction, which we're now emerging from. So we'll go from our downtrend to our accumulation to our uptrend phase, and the evidence is looking pretty good at the moment for ArbCorp. So that's a pretty good trend reversal prospect for you at the moment. There's plenty of other prospects in the market on Stockradar at the moment if you could have a look at. One that we do hold at the moment is one called Reese. And it had a nice little accumulation or trend reversal pattern down here after a big downtrend. 27 down to about 12, so just over half the price, 50% drop. It's gone into an accumulation pattern. It's broken up, and this is where we took our buy. A bit of volume, a little bit of momentum, just enough to give us a trigger here. It came back for a few weeks and then started to move higher, and it has moved higher pretty well for the most part of this year, from around 16 to around 20 now. So, and it's looking pretty good. Trend intensity originally was 7. It didn't get a full one on the break. Often trend reversals don't. But now we've got trend intensity rating is 8 as of this week, and looking pretty good for Reese. So it's got all the hallmarks of a nice little trend here developing at the moment. Reasonable volume, steady momentum, all looks pretty good there. So that's a little bit of a brush up on the trend reversals. Now new highs, I'm going to go across to, well, ArbCorp is one area, and Eagers Automotive works more in the retail area of the car supplies, car parts market. So here we are here with Uyghurs Automotive possibly making a new high. Now this is quite a big high, this one here. We've got back up to the highs of 2021. It's retraced a bit. It's come back from 16 down to nearly 8, so it's nearly halved its price there. It's now rallying quite strongly back into that new high. Okay, so volume has been a bit tailing off here, which is just something I want to point out, basically because trend intensity is a weight of evidence, and we look at the price action, which is the most important. We look at the moving average, and we look at momentum, and all those ones are positive. The only weak link there really is volume, although we are seeing a little bit pick up the last couple of weeks there. So regardless of what the volume does, I'll still look at the new high if it's qualified by my trend intensity. So it's moving towards that high now, and that's certainly worth watching over the coming weeks to see if we can certainly make a new high there for Uyghurs Automotive. And we love new highs on our stocks here. One that has done a new high is Commodities. Now there's a bit of work on here. That's only because it's a chart that I'm using in the newsletter this week. But what I really want to focus on is the current move at the moment, and that has been since the breakup back here in November 22. We had a small trend reversal here, had a bit of a correction, a trend reversal here, which gave us a break. Again, a pullback. All markets do it. Trend up, pull back, trend up, pull back, trend up again, making new highs. So it's now gone through to new highs, which is a good sign. So the trend reversal confirmation, now we're getting a new high. Trend intensity rating is +9 and looking pretty good on Commodities. Really excited about new highs because they are really what we like to see and what we like to trade. So that's looking at Uyghurs Automotive as an opportunity. Commodities is an existing one. On the small end of the scale here, just one for you, for a little one for you to have a quick look at. A very, very simple chart, this one. It is a little stock called Aussie Broadband, and it's had a downtrend. It's now going to that normal trend reversal pattern, which is accumulation pattern. We can start seeing a bit of volume starting to push this price up through this resistance level here, which is our reversal level here. So from the break here, trend intensity rating of this Aussie Broadband will give us a trend intensity rating of +9. That's just a very, very simple view. A high, low, breaking a trend reversal pattern, getting a bit of volume, momentum's just starting to tick up. It's above the average. It's just a simple alignment of the stars, which we'd like to see. Okay, so there's a few stocks for you today. There's plenty out there at the moment that are doing okay. Plenty of prospects on the new high front and the trend reversal front. If you go to Stockradar, you can have a look at those sorts of things. But for the moment, I just want to talk a little bit about the trade plan today. It's just a fairly simple thing because during these seasons you saw Coles and you saw Brambles, stocks are going in different directions. It's an emotional period, it's a volatile period, the reporting season. But we're all involved in it. We all play the game, so if we play the game, we've got to play it properly. So sometimes we need a little bit of help and guidance rather than acting emotionally. And emotions can be at their peak in reporting season with markets flying, stocks flying all over the place. So the first thing you do, the trade plan is your guide. You set that as your guide. You do that for a reason so that you know when you're in times like this, you can fall back on that trade plan and it will tell you what to do. Okay, because it must tell you what to do. So the trade plan is your guide or your roadmap. It gives you control over what you're doing. Okay, not everything's going to be a win, not everything's going to be a loss. You're going to try and make more money than you lose, and that's the game. It gives you control to do that. Okay. The second thing it does, it helps manage your emotions, and that's why we set the trade plan, because we're up here and we're worrying about all the stocks flying everywhere. We're trying to make decisions. We go back to our trade plan and says, "Oh, if this happens, I do this, or if that happens, this happens, I do that." So that's really the way it works with the trade plan. Okay, so with these elements we're talking about control, emotions, even analysis, even the trade plan rules, you have data universe, things like that. You're always trying to improve things, and so that will improve your outcomes. Each little bit you do will hopefully improve it, provided the changes you make to your trade plan are sensible. I very rarely make changes to my trade plans these days because most of them don't need to be changed. And if they do, I've got to have a good reason to change it. So, which is what I'm going to be doing with the conservative portfolio at the moment. I'm going to make some change. I'm going to announce that in the newsletter this week. For a long time, it sort of bothered me a little bit. It's been a performer, but the last couple of years I've really tested it out, and I just wanted to see if we could try and improve this performance a bit, which has worked out okay. So we're always trying to improve outcomes. So development of each sector, each segment or each element of a trade plan, I said analysis, psychology, the trade plan itself, how you're approaching it, all the different things, how you're controlling it, what your rules are, development of each section will again improve your outcomes further. So we're always trying to do that, and because we never get the market exactly right, it's always a challenge for us. So we've got to be pretty careful. Okay, so that's really what I want to talk about. It's just really looking after yourself, caring for yourself, and making your life easy by doing that sort of thing. So, in the newsletter next week, in the macro view, I look at the reporting season roller coaster and how best to deal with those periods. We cover our new communication sector in the micro view and include a few extra bonus charts for you, which are quite interesting ones, I think. And in Radar's Ramp, we look at trading momentum and high PE stocks, which is always an interesting one because these stocks go, but they're on high PEs, and we all worry about it. We can have lots of things to worry about, but really, if we're trading momentum, we should trade momentum, and that's what we do. So we'll have a look at that this week. And we also have a special stock on alert this week for you as well. That should hopefully come out tomorrow, the newsletter, once I get it all finished. Okay, so that's about all I've got for you today. Remember, your trade plan is your stock market roadmap. Following the rocky road of the reporting season can be testing, so the guidance offered by the trade plan is comforting and keeps you in control, and that's really important. Okay, so that's all I've got for you today. Stay safe, watch your trends, heed your stops. Give me a call if you need to. Otherwise, have a great week, and I'll see you next week. Thanks very much.